Welcome back to Rockstock Channel. It is Thursday, August 21st. Earlier this summer, I announced that Matt Fernley, a good friend and frequent guest of this podcast, has joined Rodney Hooper and me at RK Equity as a partner to both broaden and deepen our coverage of the lithium battery material supply chain as well as other critical minerals. We are redistributing Matt's latest Recharge podcast as today's Rockstock Channel episode, in which Matt and his co-host Cormac O'Laoire have an insightful discussion on developments in lithium, graphite, U.S. tariffs, and shifting strategies in Chinese battery materials sector. As always, please remember that this video is for educational purposes only and is not investment advice. Please do your own research and read the disclaimer at the end of this video. Enjoy the discussion.
Hi, my name is Matt Fernley, editor of Battery Materials Review, and here's all the key news in the world of battery materials this month.
Welcome to August's edition of the Recharge podcast. Apologies for our absence last month, which actually wasn't my fault this time, but we will move on swiftly. We've got obviously quite a lot to talk about in the last 4 to 6 weeks or so. So without further ado, let me welcome my co-presenter, Cormac O'Laoire, MD of Electrios Energy, and let's get cracking. Hello, Cormac.
Geez, for that. Yeah, that was my fault this time. I did get a number of complaints from irate listeners that we've trimmed off during the summer.
Me too. I mean, I suppose it's a nice position to be in, that people are pissed off when you don't.
Yeah. I'll learn my lesson this time now. Always keep that spot open.
I suppose there's certain things to talk about. Let's start with lithium. Obviously, quite a substantial move in prices last 4 to 6 weeks or so. You were at the Fast Markets conference, which was basically the trough for lithium prices in this cycle. What was your sort of feedback experiences from that?
That is a bit of a watershed moment, all right, because nobody at Fast Markets indicated that prices will be moving in any way in the next 4 weeks. So just goes to show you, really, anything can happen in this business, right? And a small little province, Yichun in China, can upend the whole market. Who would have thought?
Obviously, we had the first was the news of the Zhangyi, probably got my pronunciation, it's probably awful there, but the Zhangyi brine asset that sort of was taken offline. And then obviously there's the CATL lepidolite. Do you have any thoughts on I guess, firstly, how this is working? Is this the Chinese government, central government doing this? Is this coming in at the regional level, sponsored by the Chinese government, is coming in from somewhere outside? That's the first question. And then the second question is, from your contacts there, do you have any idea of sort of how long this will last? I mean, I have my own views. I'm just interested to sort of pick your brains.
I had a few calls with some of our network in the area and the CATL as well. The line from CATL does not affect their business in any way, shape, or form. They're planning to resolve it in the next 6 to 8 weeks. In typical CATL fashion, I think this is something that they expect to. This does come down from that new materials regulation in China that was implemented in July. It looks like the central government's trying to get a hold on what's going on in Yichun and primarily around lepidolite mining, which, the local governments back in, I think it was October, November, were shutting down mines on environmental concerns. And I think some of this involves that also, because from what I gathered, there wasn't much of an improvement. But now with the new natural material regulations law,
I mean, it's really, really interesting, because obviously CATL shut this operation down back end of last year.
Yeah.
And then obviously reopened it in February under pressure from the local government, as we understand it, because there was a pressure on jobs and everything. So they reopened it in February, even though it was, let's be charitable, right on the cusp of profitability. Now they're shutting it down again, and another sort of pressure from another part of the government. So you're like sitting there going, well, what's going on? I mean, I'm hearing it's to do with the fact that their resources are not compliant. When I was in that area in November, we visited one of the mines. It wasn't the CATL mine because that was closed at the time. But we visited one of the mines and we were asking about the quality of their resources. And they basically let slip that they hadn't really done any resource drilling, and really their resources were estimated on the fact that they know the continuity of the deposit, they know the depth it goes down at, and they knew the area. So they had estimated the resources that way. Obviously, that's not acceptable from a Western standpoint. We assumed it was acceptable from a Chinese standpoint. We now find out that actually it's not acceptable from a Chinese standpoint either. So it's pretty interesting. I mean, how many holes do you have to put in to define a resource? And if they're going to put the resource in place, do they have to define the whole resource? If your source is right and they can restart production in 6 to 8 weeks, I don't think they could drill the whole resource and do the geostatistical work in that time. Are they just going to drill a part of the resource and allow them to get it open again and then worry about doing the rest over time?
Yeah, I haven't heard anything about exploration. The original permit on that mine is for ceramic clays. Doesn't even mention the word lithium. From my understanding, they got to redefine that because now it's a critical Chinese material, lithium, that the paperwork says ceramic clays with byproducts. Lithium is in the list of byproducts on that. Now they'll have to resubmit a permit under lithium mining, in my understanding.
And I think if they do that, they have to have a certain level of resource to justify that, was my understanding.
I've seen Chinese exploration before in other materials, and yeah, it's not exactly what you see in the West in pre-feasibility studies or feasibility studies or definitive feasibility studies. It's kind of let's just use up what we got in front of us and then find more. I've seen elsewhere. Yeah. CATL view it as a paperwork exercise, resubmitting permit applications, but
and I guess the $64,000 question, or maybe even the $64 million question, is how susceptible do you think other projects will be to these new rules going through? Because obviously the CATL project is, at current production levels, probably like 3% of global supply. But if you whack everything together in Jiangxi province that's being mined on that hill, it's probably closer to 10%. So is there a risk that CATL's problems could sort of cascade into other suppliers?
It's a bit coincidental that this happened when lepidolite mining in that region is probably negative in terms of profitability at this stage, right?
Well, less so now, but yes, when it happened, definitely.
So you got a lot of other miners kind of pausing as well, saying they're doing annual maintenance now in that region as well. Maybe they're cleaning up the sites. But yeah, there's potential for a lot of those. As of now, there's 8 more mines that have to get their paperwork sorted out as well to go off offline. I think they got till September 30th to submit the paperwork. But yeah, there's a lot of. You were asking what's driving this. There's the lithium miners have been bought into Beijing. I think 30 of them were in Beijing in the last couple of months to discuss lithium pricing with the government and this issues around oversupply and price competitive. The EV makers were bought to Beijing, talking about price competition as well, and the cell makers. So coming from a number of factors on a number of fronts, and this is what's culminating in, I believe.
That's potentially quite a substantial change, because obviously for the last couple of years the government has been pretty happy with over competition, oversupply in the space, and now it sort of seems to be saying, look guys, you need to get your, excuse my French, shit in order and sort yourselves out and stop over investing in capacity and just basically properly run these industries.
All this capacity, right, this is expected. I think you mentioned it 2 years ago during the price. CATL were exploring an exploration license in 2022 for this project, and they were up production in 12 months. And that was all in response to, and that was around the $200,000 or Euro RMB contract they developed. And all that was response to the high price. A lot of these, and now we're in a low price. Well, you might think, or relatively low price. It depends on what month you're looking at it. But
what day?
There's been the investment in lithium mining in China has dropped, right, in this low price. So we're going to see that swing again of on and off capacity. But the amount of investment that went into 22 versus 2025 is a huge drop off.
But I think to some extent what we're seeing here is a change in industrial strategy by the Chinese government. We saw it at the back end of last year with the rare earth, so that the Chinese changed their strategy at the back end of last year, stopped trying to force the Western miners out of business by sort of oversupplying the market and started focusing on the profitability of the domestic miners, merging them together to make the two national champions, and basically sort of right-sizing that industry, if you will. And it looks now like they've moved that into the electric vehicle and the battery value chain as well, and basically saying, look, making oversupply in China is effectively exporting our raw materials to a world that doesn't necessarily want to pay for our raw materials. So it makes more sense for you guys to be catering for the domestic consumption markets rather than overusing our raw materials and not getting value out of them. It seems to be a change in strategy to me.
China is still a net lithium importer, right? And there's been, as you document in BMR every month, a real dearth of investment in lithium now at these prices, not very attractive. That also affects China because it will still be a net importer of lithium for a long time, right? And if these projects aren't coming online, where they're going to get their lithium from? I mean, you could be right. Maybe they're seeing the broader global picture.
It's the third material I've seen this in. So we saw it in rare earths at the middle of last year. We've seen it in alumina and bauxite. And now it looks like we're seeing it in lithium as well. And, you know, when it happens once, well, maybe it's a one-off. Twice, well, you know, maybe it's a coincidence. But three times, it's starting to look like a specific strategy by the Chinese government.
They're sitting on lithium, right? So CATL's argument here is they can buy it cheaper than they can make it currently, right? Or last week or the week before. But
you know, when they get their papers signed and everything, and if the lithium price goes up, then that mine is a wonderful hedge for them because, you know, if the price goes up to a certain level, then they can pull out of the market and go back to mining it.
Yeah, I mean, I read that one analyst, Chinese analyst, viewed it as a strategy where that's a lithium piggy bank for them, and they'll operate it when and as needed and continue to play in the market at the same time. So, as you said, it's sitting there. They can use it anytime, expand it probably as well. I'm not sure about the labor, as you mentioned there. I think they could still afford to keep the staff on and under care and maintenance, right? A number of them, and still make a profit buying lithium on the market.
That is China. Let's talk about the US, which is really keeping us on our feet at the moment. So, a couple of things. We've obviously got the US tariff that has been imposed on anode materials being exported from China, 93.5% tariff on both natural and synthetic graphite. We have got the extra 90-day extension to the bog standard US-China tariffs, which was announced this week actually after BMR was published, I think. And we may indeed have more things between when we recorded this podcast and when it goes live. But let's stick with those at the moment in a very, how should we say, mobile market where things are changing very fast. So what do you think in terms of the sort of anode materials tariff? I mean, for me, that it's going to make it quite difficult for US battery makers, cell makers, to compete, given that they do effectively have to import graphite at this stage. I understand that there's an exception for BESS, I understand.
That's right, yeah. There's not a lot of options for graphite in the US right now at the moment, right?
Yeah.
During the Graphite Association that kind of banded together for this, I think they have very little of zero graphite production capabilities, right? Synthetic or natural.
Yeah, I mean, the only, anode material producer really at the moment in the US is Syrah, and they're not in commercial production, I don't believe.
Yeah. I did see part of that strategy was involving the capabilities of US to make synthetic graphite from natural gas or acetylene or some other hydrocarbon products. So there seems to be a strategy here heading down that road of backing that up with, Trump will enjoy that, right? Refinery products from oil refineries.
I mean, obviously, that's one of the sort of core raw materials in China for synthetic is petroleum coke, isn't it? So it's very interesting to see. I mean, there are a couple of small sort of synthetic graphite manufacturers in the US, but they're not anywhere large enough to sort of supply the industry at this point.
Yeah, I mean, there's no runway on this. This is right now, isn't it?
Pretty much. And obviously, there's the BESS exception. I think they can carry on making it for BESS, but for the EV story, it's still very difficult. Of course, then the other interesting thing is one of the big gainers in terms of spherical graphite exports from China over the last 6 to 9 months or so is Indonesia. But BTR has just announced that I think it's ramping up its plant in Indonesia. Yeah, I mean, it's a really interesting story. Can the US import from Indonesia? I think there's a lot of misunderstanding about graphite anode material, non-synthetic anode material. I mean, I think the Koreans cheat a bit. So they import uncoated spherical graphite from China coated and then sell it on as a Korean product when in fact it's basically a Chinese product with a Korean coating on it. It puts quite a lot of pressure on from the industry, certainly in the near term. And obviously the view is that they, by putting these anti-dumping duties in, they make it much more viable for US companies to develop anode materials. But obviously for the battery makers at the moment, it is going to make it a level more expensive for them.
Yeah, I mean, I haven't seen the numbers. I guess you may have calculated them. I guess the potential additional costs on the anode side and the overall battery itself.
The anode in a battery is quite significant. It's a lot more significant than, for instance, lithium in the battery, in terms of mass. So it has the potential to add a fair amount in terms of cost.
I think it's around 30% or slightly less graphite towards cost, but I mean, 900% reciprocal. Is that what it was? Sorry, not reciprocal, tariff up to. I mean, it depends. They had a list of Chinese graphite producers. The only one I didn't know was Shanghai Knitwear Company.
Yeah, I saw that as well. But and that got the sort of several 100% tariff. So obviously they don't want the Chinese knitwear or the
yeah, they don't like their knitwear either. Yeah. But yeah, I mean, Tesla are rallying against it as they've done historically every time a tariff on graphite is brought up.
It gives the graphite developers more protection, but in the meantime, it's painful. It's going to be painful for the battery producers, particularly in the EV space where things are really tight anyway at the moment.
Yeah, I haven't dug into the imports yet, but if what you say about Korea's graphite source is true, then I mean, technically, the U.S. battery production supply chain technically should be independent, right, of China if you're using Korean and Japanese who do have graphite producers, right?
I mean, the Japanese have got a little bit, but it's really targeted at their own industry, and it's a small industry over there. I don't want to say commodity players, but the commodity players are all Chinese, the people who can supply in large amounts at the moment. So it's going to be very interesting, I think, going forward.
Is this going to, the graphite sector has suffered from investment as well and headlines in a certain aspect because, they don't really do much. They don't have sexy headlines of we improved energy density or we're better than BTR this or that. It's just like for like product, more or less.
Well, silicon anodes
I mean, that's different, of course,
are sexy. And the US has got some really interesting sort of silicon anode development companies. So maybe that's an area where it could sort of lead the pack on the R&D side.
Yeah, I mean that's where US have the lead on lithium metal. They lead on silicon as well. Like they let in all the other materials, and hopefully they don't leave silicon slip through their hands. But the Chinese players are also doing silicon carbon as well. Percentage of silicon carbon, even I think you showed a paper there about Tesla versus CATL.
Tesla versus BYD. Yeah.
BYD, yeah. I mean, you're seeing a lot more silicon carbon in the graphite side or on the anode side. Yeah, I should stop saying graphite only. But be interesting to see how that is that involved in the tariffs in any way at all. Silicon carbon content, which Tesla are definitely using.
I don't know. I have to do a bit more work on that, I guess. Yeah.
Yeah, I mean, interesting, but not really good for the sector.
No, I'm not for the cell makers, I don't think. Not for the cell makers and the EV makers. Potentially, a positive for the graphite and anode material makers.
Positive for BESS, as you said, I guess. But
it's only a short-term window for BESS, isn't it? I think it's a couple of years window for BESS. And obviously it takes longer to fund and build a graphite or an anode plant than 2 years. As we found with the Sara plant, we're what is it 12 months, 18 months now into sort of since they first started producing and we're not really into commercial production yet.
I mean, yeah, we've seen that Yeah, Sire is probably the better known example, but there's been graphite projects in US for as long as we've been doing this podcast that haven't really got up to where they promised. I think you've seen a lot of those mining projects, graphite natural mining, where big promises, different extraction methods and production of spherical graphite and even coating, but how much of that has actually come to light?
To be fair to them, I mean, one of the reasons that they have struggled is because the natural graphite price is so low and the spherical graphite price has been so low. And obviously, 90% of that is because the Chinese have been oversupplying the industry and therefore they've kept prices what the US would term as artificially low, dumping material below the cost of production. I think that's why I sort of say it's a good thing for the graphite industry, and it gives them a sort of moat and a sort of a wall that allows them to develop. But obviously, it is painful for the battery producers at a time when the battery producers are not particularly profitable, and the EV makers ditto.
Yeah, I mean, this is a short window, right? The North American graphite projects feasible? I mean, do you have to worry about today's price of graphite and next week's price? Can't you have a 10-year, 5-10-year outlook?
You can, but nobody's going to fund a project with a 5 or 10-year outlook if the price is sort of like multiples of where the current price is. If the price is like, if you require a price of 5 times the current price to get a 20% IRR, nobody's going to fund that project. They would only look at that project if there's a viable chance of sort of getting to that price. They won't fund a project that can only function at the top of the cycle. People want to fund a project that's profitable throughout the cycle.
Makes sense. It's pretty tough then. Chinese prices probably aren't moving too much.
To tell you the truth, I think the thing that really makes the Chinese prices move will potentially be a higher oil price. If there's a higher oil price, that then makes the sort of petroleum coke and the needle coke more expensive, which then impacts the synthetic graphite prices / cost, which then creates a flow through. Because the other thing that the natural graphite industry is dealing with, of course, which I think is really important and people don't really think about it, is that what synthetic has a sort of 70 to 80% share of cell production in China at the moment.
At least, yeah.
So they're not really using huge weighting in natural graphite. So a lot of this investment that's gone into natural graphite over the last 5 or 6 years, these plants are running and they're just sort of dumping and prices are at bargain basement levels. So that's another reason it's been very difficult to sort of get, natural graphite operations.
I mean, there was a well-known battery consulting firm pushing a natural graphite shortage. They seem to miss this whole statement that most of the market's synthetic, which, was going on at least 5 years, where there, as you said, no demand for natural graphite in Chinese battery factories, more or less. And the Koreans and Japanese are more or less the same as well.
That sort of synthetic thing has only happened because the prices of synthetic have been so low. I think if synthetic graphite prices were higher, you would have more of a demand for natural, because the quality of natural has come up so high or so much higher over the last couple of years. I mean, natural's a reasonable product now, but obviously if I can get really cheap synthetic graphite, I don't think about natural.
Yeah, I got to check my prices here, but last time I checked, they were pretty close.
Yeah, exactly. But in recently as 4 or 5 years ago, synthetic prices were double or more.
Gotcha.
Natural.
Okay.
Maybe just talk very briefly about, I know it's sort of crossing areas a little bit and rather outside your sphere of expertise, but the deal between the US Department of Defense and MP Materials, obviously creating a lot of column inches. If I've had one question, I've had 5,000 questions.
Well, I got one for you.
Do you think that this deal that they've done in rare earths is going to happen in lithium? That's my question for you. No,
wow, I haven't had that one. I mean, have they already done it with Lithium Americas?
Well, not in the same way. I mean,
not in the same way.
Americas,
I mean, that would be
debt available. They haven't made an equity investment, and certainly they haven't put. I mean, for me, the core thing with the MP Materials job is, one, they've put equity in, but two, that they've guaranteed the price floor.
I mean, I would say lithium consumption in America, lithium hydroxide, lithium carbonate is minuscule. I mean, who's this floor market for it? Where's it going to go if you did it in lithium? It still have to go outside the jurisdiction to enter into the battery supply chain. And once you leave US, if they did the same thing with the floor price, you maybe Koreans would be buying it higher, whoever higher than their neighbors are selling it for.
So that sounds to me like a no.
Yeah. I just, people always talk about.
I mean, I agree with you, but for a different reason.
Yeah.
I would say that for me, they've done this because of the defense applications of rare earths, and there aren't really defense applications of lithium to the same extent. So they want to secure their supply chain for rare earths for defense applications directly, and obviously rare earth magnets for defense applications directly. And obviously China did not dominate 80 to 90% of the supply chain and like 96% of the processing chain, whereas that's not quite the case in lithium, where they have a much smaller position in the actual upstream supply chain. Even though they still dominate sort of lithium hydroxide processing, they don't necessarily dominate in lithium carbonate and other areas.
Since Trump came into office, most of my US clients are going after DoD funding now.
That's been a big change.
Where previously we were all going after your DOE funding, and now it's DoD, it's guaranteed money. You don't need a consumer. DoD is your buyer, is your consumer. More kind of niche products would be like high power batteries for military applications or materials that the military needs again. So yeah, you don't need forecasting of consumer sentiment and EVs for DoD contracts or funding. So yeah, there's big change in amongst my customers and what our clients and what they're doing. But I was going to ask you, what's the difference between this artificial pricing and what people accuse the Chinese government of doing, what the US done and what people don't like the Chinese government may or may not be doing?
Fruity. Two sides of the same coin, isn't it, really? It really is. And I mean, I put a post on LinkedIn about this back end of last year, beginning of this year, basically saying, one country's price manipulation is another country's securing its supply chain. It's all a question of perspective. I think I used the Return of the Jedi quote. What I told you was the truth from a certain point of view. And it is. It's all a question of perspective, because what the Chinese are doing is securing low raw material prices for their downstream supply chain, which they get more industrial value add out of. And what the US is doing is trying to secure higher prices so that they can develop an upstream supply chain, so that they can get more value add out of the downstream. So it is the same coin. It's a similar sides of the same coin.
One's gone low pricing, the other one high pricing. And the one that went low pricing is like not cool, but the high pricing is okay. It's interesting. I might give the Chinese a bit of a pushback on every time they accuse the Chinese government interfering with the battery supply chain or raw materials. But yeah, it'd be interesting to see where it goes. Why did you think it was REEs first? I mean, that's just DoD came in and it was unrelated to the current administration.
I think for the the reasons that I gave in terms of them being very exposed to the defense applications. Also, the US conversation on this has changed. It's now become a sort of a geopolitical risk environment with critical minerals rather than an energy risk. So it makes sense that the focus has moved from the Department of Energy to the Department of Defense. That's certainly the trend that we're seeing in the US, and we will continue to see. I mean, the other big question that I get quite regularly is, if the US has done this, will other countries follow suit? I'll give that one to you first.
Before you move on to that, I think you made a statement on LinkedIn that this big investment in REEs, but MPM Materials doesn't have a lot of HREEs.
Heavy rare earths, yeah.
A lot of people in the sector are coming back saying, what experience do MP Materials have in making magnets?
Yeah.
I mean,
yeah, no, there's that as well. I mean, they are starting downstream plants, but the experience that other companies have had in the space is it can take 18 months to 2 years to ramp up midstream, downstream plants in these materials, because it is very, very complex. I mean, obviously, you're coming from a chemistry background. I've come from a bastardized chemistry background with a few wrong turns on the way, but the processing of these materials is very, it has to be very, very chemically exact. We're talking, levels of purity that you don't get in a number of sort of industrial products. So these products are unforgiving, and it does take a long time to ramp up the midstream and downstream supply in these areas. So assuming that, just because a plant is planned to open in, say, December 26, doesn't mean it's going to be in commercial production in December 26. It could be 27 or 28 before it's in commercial production.
I'm sure it has to get qualified and the rest of what we see in the battery world. But yeah, it's going to be fascinating to watch how this plays out and how committed the DoD are to it. I'm sure it's a funding runway as well with milestones. But
Okay, so my question:
your question,
other countries will follow suit after the US?
Yeah, I think China. I know.
That'll put the cat
I don't know if anyone, Australia could do it, I guess, but they haven't even done it in lithium. It's still an exporter. But is anyone as well endowed with REs? Besides, let's say Russia, but you couldn't afford.
I mean, Brazil could probably do it. They've got a lot of RE projects and everything. But
that's true.
Very upstream stuff. The big question people were sort of asking is, well, would the EU do it? And I don't think so, because I just don't think the EU is organised enough to do that, and it would require buy-in from all of the member states. Pretty significant, development. I'm pretty sure that the EU wouldn't do that. The Japanese have already kind of done this by sponsoring Linus, so that I think the Japanese are pretty happy they secured their supply chain. If the EU doesn't do it, I don't think anybody else is big enough or has enough disposable cash to sponsor something like this.
Yeah, I mean, the EU is a total disaster for doing anything like this, right? So
you could say that as a European.
Maybe how about the UK?
For me, it sounds like sour grapes.
How about the UK?
I've had discussions with parts of the UK government about this, and this was obviously sort of 5 or 6 months ago. There wasn't a lot of appetite for, I actually did ask them about price floors, and there was zero appetite for price floors. So I would say highly unlikely.
Oh yeah, just on price floors, because you've seen it before, I think in other sectors. What do you think that does to the health of a market and long-term health? I mean,
I think it's a really interesting question. The big question is that the price floor allows these projects to sort of get developed, and it gives a sort of guaranteed sort of return for the first 4 or 5 years of production, as you will. But if you want to compete in a global market, you've got to have costs that are comparable with the rest of the global market over time. There's no point in building mines and processing facilities that are only profitable with your price floor, because at the end of the day, these things are costing $500 million, $1 billion, $1.5 billion, and nobody wants to drop in a couple of $1 billion to build assets if they're only going to be able to run profitably for 5 years, and as soon as the government withdraws its support, they're going to go bust. So I don't think people should sort of see it as a carte blanche that every single rare earth project in the US is going to get developed. It's still going to come back to, even if there are two prices, a US price and a global price,
it might be just the MP materials price, another US price.
Projects are still going to have to be relatively profitable or able to operate at the global price. The big question then is, does the global price come up to the US price? I'm not convinced it does fully. I sort of likened it to a sort of equity raising in my blog comment, where I sort of said, well, if a strategic investor comes in and it makes an investment in a company at, say, 20% above the share price, often the share price doesn't go as high as the strategic investment price. It sort of stops about halfway there. And I kind of think that's what happens, in the rare earth market with this floor price. Because don't forget, the floor price is like, 70 to 80% more than a prevailing prices at the time, or the 10-year average of prevailing prices. So it was a significant uplift. I think it's a really interesting question. I guess we'll see the answer going forward.
But these materials aren't going to the market, right? They're going directly to DoD, I think. Is that the terms?
Yes, the materials from MP, and then obviously you have to see if the DoD does similar deals. There are projects in the US that are looking to develop higher proportion of heavy rare earths, at least 4 or 5 of them. So the question is whether the DoD does similar deals with other developers, or whether it sort of looks at MP as the US champion, and everybody else will do business with MP, which will then put this material into the DoD.
So is this going to enter the EV market?
Yeah, so we don't know. We don't know at this stage whether it goes only to defense applications or whether it comes into other applications. But I think it's a way of the US government building an independent supply chain, so it doesn't have to worry about this material anymore. Yeah.
So as you were asking, is there a room for lithium? It depends how much lithium the DoD need then, right?
Yes, and I mean, I think it's less relevant with lithium because I think there's more lithium outside China. The world isn't beholden to lithium. You've obviously got the POSCO refinery in Korea for hydroxide. You've got the 3 refineries in Australia, although 2 of them aren't doing that great. You've got the Texas refinery that Tesla are running. You know, a couple of other projects underway as well. You've got the AMG refinery in Europe that's just opened. So, you know, there is now, hopefully, hydroxide supply outside China. We know, obviously, that there's a lot of spodumene and a lot of carbonate supply outside China that is not controlled by Chinese companies. So I think it's less important in lithium than it was in rare earths. Obviously, having said that, probably tomorrow they'll turn around and do a deal with a lithium company.
Yeah. Show me an analyst and I'll show you someone who's wrong. Is that your phrase as well?
yeah, exactly. Okay, let's move on and talk a little bit about the EV market and the BESS market and everything. The first half of the year, global EV sales pretty strong, round about up 23% year on year. Thoughts on that?
And global EV sales?
Yeah, global EV sales.
EV sales are good, right? You just said they're getting close to 30% global, right?
No, 23%. 23% in the first half.
Oh, Europe's 30%, 29%.
Yeah, Europe's 30%, and then, I mean, obviously the July numbers were a little bit less than stellar. I think the US came much higher than people were expecting, but Europe and China were a little bit weaker than people were expecting. That's the July preliminary numbers.
Yeah, I haven't seen the July numbers, but I've seen the Chinese ones. Is that typically a little slower in July, right?
Yeah, so I mean, generally you find China has a bit of a lull mid-year and then is very strong in the fourth quarter. You've obviously got the National Day holidays in October, and then October and November are normally very strong. So, you know, we'll see how we do. There are obviously have been a few news stories around the China scrappage scheme about some, shall we say, dodgy business going on with sales, and the scrappage scheme, I think, has been halted in some cities. So that obviously is a little bit of a concern, given that China has been really very much supporting the EV space.
Yeah, obviously, scrappage schemes are always dodgy, right? Anywhere in the world.
And we are hearing, I don't know if you've heard it, but I've heard a couple of stories recently about inventory build in the EV chain in China as well, at the EV level. I mean, we've heard those before, and they didn't really come to much. So a bit more research is necessary.
I'm hearing a lot of trade-in offers, 30% off EVs for trade-ins. Well, just as you mentioned it, I think they'll need to get a lot of inventory off the books before the end of the year, right? Or move it. A couple of the bigger players there.
One of the stories I did see, which was really nice to see, is that even though, you know, US sales haven't been that strong for new EVs, seeing a lot of strength in the used EV market in the US, which is really nice because it suggests that, you know, people like the product, even though maybe the price point is still a little bit high.
Yeah, I haven't seen that data on the used EVs, but I've been kind of rallying against used EVs in the US, right? Well, maybe a year or two ago, because the price of a used EV was pretty close to the brand new price.
Minus it's come down. Price. It's absolutely collapsed in a heap. Yeah, the used EV price absolutely collapsed over the last sort of 12 to 18 months or so. So
that's what we had in
now
the
they
UK
actually
last
look like
year, right?
Pretty reasonable value, yeah.
UK, but the EV market in UK and Ireland is used is quite pricey now again.
Oh really?
Yeah.
Is the O'Laoire family looking at a new?
No, I got People seem to think I'm into electric vehicles, and I get people sending me used used EV, links to used EVs that people want to buy. They're like, "What do you think?" And
I mean, why would you want a used EV when you can go out and buy a brand new BYD EV and be happy as Larry?
well, they're more expensive than the European EVs, right? The Seal is, significantly more expensive than the ID3, for example. But
The Seagull, though, which
yeah.
has launched
Oh,
in.
sorry. You're in the Seagull.
I'm a Seagull man, and the Seagull has sold its 1 millionth model just 27 months after launching, which is pretty impressive, wouldn't you say?
Yes, I
So,
mean, this BYD do continue to impress on volumes and numbers.
and I think the other thing that's really interesting is the Chinese exports into Europe, into Latin America, into Asia have been really strong this year.
Yeah, Latin America. If you look, I'm just looking at BYD Seal sales in June here. You have 720 battery electric vehicle versions of that vehicle, and you have 6,462 sales of the PHEV version, which is that kind of loophole in the European tariff where there's no tariff on PHEVs, right? 722 of the all-electric version versus PHEV. I mean, it's almost 10 times, 10x sales in the PHEV version, which is just shows you the appetite for PHEVs in Europe is still pretty, or is getting stronger,
in China
not getting
as
pretty
well.
strong.
I mean, the PHEVs are doing really well in China. I mean, the average battery size for top 10, top 15 sales hasn't really been sort of increasing that much over the last sort of 12 to 18 months. And it's because the PHEV share has been holding very strong. So, even though we see battery sizes for models increasing, the actual mix of battery sizes for the whole market is staying quite steady because PHEVs have been gaining market share.
I do publish it every month. Average battery pack size in July is 54 kilowatt hours in a EV and 28.8 in the PHEV in China. But they do kind of fluctuate. For BEVs,
they do
55.
go up and down. Yeah, I track that data as well.
That's like smaller vehicles entering. But we have seen, though, I think you mentioned a few years ago, the PHEV battery packs have grown as well, right?
Well, I mean, I think probably
hours.
5 years ago, the average PHEV battery pack was about 12 or 13 kilowatt hours, and now it's about sort of 20, 25 kilowatt hours.
Yeah.
And obviously the EREV battery packs are even bigger still. So they're coming in at like 30, 35, 40 kilowatt hours.
I see the exports in EREVs have ticked up in China to Europe, and as you said, Brazil is a big spot. But Brazil is trying to stick tariffs on Chinese EVs as well, for kind of flooding the market there as well. Have you seen pictures of Brazilian ports with rows and rows and rows of Chinese EVs still in customs or caught in customs?
No, I haven't seen that, but it wouldn't surprise me. Okay, and I think we should probably talk about commercial vehicle sales because, on the plus side, those have been very strong. Electric truck sales in China, I think, are up 175% year on year. So that's very interesting. But interestingly, from that news flow, what I take is that short haul models are accounting for the biggest percentage of the increase. So obviously, short haul models are going to have smaller batteries than the big long haul models. The fact that electric truck sales are so strong that could be very, very, very relevant.
Yeah, I mean, I usually ignore that because I just can't take it all on. But commercial vehicles, China. I'd like to see the size of those vehicles. The inner city doesn't really have like kind of like the UPS van size trucks. I wonder, half the deliveries are kind of bicycle style, three wheelers. But I'd like to see what size these trucks are.
Well, I know that some people are very, very positive on truck sales with big batteries. My assumptions are a little bit lower in terms of battery size.
I have seen battery sizes that seem equivalent to EVs, but classified as commercial vehicles.
I mean, I think it's very difficult. I mean, in my models, I actually differentiate between light. I have one for light commercial vehicles and one for medium and heavy commercial vehicles. And then obviously medium and heavy have much larger battery sizes. But I mean, it's good news that we're seeing such strong commercial truck sales. We also saw quite strong commercial sales in Europe last year, but a lot of that was subsidy driven. So it'd be interesting to see whether it sort of continues going forward.
That's what I was going to ask you. What's the reason for the 173% year on year commercial in China? Is it policy, subsidies,
bit of everything,
better product?
bit of
Yeah.
everything, and also a better product.
A lot of fleets are buying them, right? I
Yeah.
met some Chinese logistic companies in the last 12 months or so, and those guys are buying 50, 100 trucks for designated routes that they know exactly where they're going, 100 kilometers or less. They can either do the whole journey or they know where they're going to charge at the end. It's just logistics, bringing one product from one factory to another.
And, for that sort of business where you have a fixed route,
Yeah.
you know where you're going to charge at the beginning and the end, it makes a lot of sense. I mean, it's a lot cheaper than running a gasoline vehicle. So I think, that's potentially a real big market for light commercial and maybe medium commercial as well.
You know what we never talk about, and was the big Chinese electric vehicle growth area in the early days, and is the electric buses. That's when they
Yeah.
first cut their teeth in
That's been a
electric
little
vehicles.
bit disappointing the last couple of years. Actually, when I went in and did my July BMR, I updated my demand forecast numbers. I actually pushed up my commercial vehicle demand forecast a little bit. The bus data has been quite disappointing over the last couple of years. It didn't really sort of take off the way I had expected it to.
Is it
I mean, it's
flattened
slow
or-
and steady, but it's
Yeah.
not like it hasn't really sort of sprinted ahead.
I mean, like Yutong, I think it was. There's a lot of Chinese buses in Europe as well. I don't know if you look out the window, but they're here as well. But not the electric versions. But
In London, we've got a lot of. I mean, in central London, we've got a lot of electric buses and plug-in hybrid buses. Probably, on light commercial and buses, maybe heavy as well. Battery swapping really works potentially as a technology, because obviously if you're going out and you're coming back to a fixed location, maybe it does make sense to be able to just swap the battery out and start again, rather than being, having sort of a couple of hours of enforced downtime while you charge it.
yeah, I mean, capex, right? The costs, high capex always turns people off for various reasons. I mean, yeah, you tell London bus, you can buy a bus for 100 grand, or we can build a swapping station for 500. And I mean, that's one of the big issues. But it's not really. But the commercial trucking in China, a lot of that is battery swapping. But I've seen it.
Particularly with CATL moving into that space as well.
Other than Neo, I mean, and CATL, we haven't seen a lot of other moves. Like BYD has not entertained battery swapping at all, right?
Yeah, I think, reading between the lines on CATL, I think there is a lot of focus on the commercial business for battery swapping, because it does make a lot of sense to go down the swap route for commercial if you've got a fixed route. If you've got a fixed route, or you're stopping in the same place every night, battery swap station potentially could make a lot more sense.
Yeah, I mean, that is the argument.
And obviously, if you've got like a 300 or 400 kilowatt hour battery, that requires a lot of power to charge. And you may not be able to charge. You won't be able to charge 2C, 3C, because that's a hell of a lot of power. So
you got 10C with BYD, right?
Yeah. But I don't think you can do that on a heavy commercial.
I mean, in the early days, there used to be a lot of bus fires, and they were always LFP. Prior to LFP taking off, it was primarily used in buses in China. Modern cities, right? You got in Europe, you got trams, and in US, you have historical like electrified buses that run along lines, power lines, like you'd see in mining sites, where they say there's various ways of getting around cities, and China's got in the tier 1 cities and even tier 2 of fantastic subway systems.
Yeah.
But, they always back that up with buses, though. So
okay,
you won the argument. Battery swapping at commercial level. Yeah.
I think let's call it a day there. We've been meandering on for about an hour or so we can come back to this next month if there's no news. I'm sure there will be lots of news for us to talk about, but I will say thanks very much to Cormac.
Thank you, Matt. Great to catch up with you again.
So that brings us to the end of our podcast for August. As always, you can get more detail on all of the topics we've discussed, and indeed many more that we don't have time to discuss on a monthly basis, in the latest issue of Battery Materials Review, which you can find at www.batterymaterialsreview.com.
I'm Matt Fernley, editor of Battery Materials Review, and this has been Recharge. Thanks for listening.